back at it with another one. You already know what we're doing today. I said it in the last video. It's a market recap of GU. That's the only pair we're gonna be doing for the next probably rest of the year, if I'm gonna be honest, because I'm trying to master this pair, like reading, like being able to read it. And I don't know, you know, I think I'm getting there. It just takes market experience and just time. It just takes time. But I'm getting better with it, especially with GU. But after GU, we're gonna hit up these two. We're gonna do gold, then S&P. Now, the reason we're probably gonna do S&P first, then gold, because gold is very, very volatile. Too volatile for me right now. But I did take a swing trade on gold though, off this big imbalance on I think the weekly time frame. I don't know. I was fucking around with it. Yeah, big imbalance off the weekly time frame, and then I just went down to like the 4 hour and targeted a high right here. So that was the gold swing trade. That went on for like I think a week or something. I don't know. Went on for something crazy though. Yeah, about a week or two. Two now. But I hit take profit this week. But we're not here for that. We're here for GU, like I said. So if you remember from last video, we hit, well, not from last video, but the video before that, we hit a market equilibrium on GU on the 4 hour time frame after we swept this low. If you guys remember, we swept this prominent low on the 4 hour, came up, hit this prominent 4 hour high, swept it, and that's basically going to be the start of our move for today. Well, not today, but that's our major move. This is our major block to put us into a play today. I did take a trade today, so it'll be a trade recap, not a market recap. My fault. But I'm going to show you why I took this trade and how I took it based off my confluences. So on the 4 hour time frame, I saw that we swept this high, and after we swept this 4 hour prominent high, I took my my Gann box from the high to the prominent low right here, and I saw that we were in market discount. We were like consolidating at market equilibrium, not discount, my fault. But then after we pushed through discount price, we came up and filled this imbalance right here. This humongous imbalance. Here, we'll mark this out. Oh wait, crap. This right here, sorry. My fault, I need a Gann box. But yeah, you can see we filled out this massive imbalance. And not only did we fill out an imbalance, we also tapped into an order block to accumulate orders. Now, I'm going to get into accumulation and distribution later on. Now, accumulation is putting pressure for the price to rise, and distribution is where sellers are, they have more pressure than buyers because you're distributing liquidity throughout the market where you're accumulating orders to distribute. Does that make sense? I'm gonna do a separate video on it, but that's the gist of it. I'm trying to catch you guys up to the basics of smart money. So after we swept this high, we made an order block on the 4 hour time frame, and usually the order block is the move down. Now this is gonna be like a daily order block later on, probably, and we're probably gonna see a humongous reaction off of it later on. But for right now, we saw a tiny reaction, and after this order block forms, remember, after you sweep the high and the move down, always move down. So I marked out the order block, and after I did that, I came down into the 30-minute time frame, and I marked out my sessions for the day. Now, the reason I'm marking out my Forex sessions for the day is for take profits and for intraday. Now, if you guys remember the differences between market structure video on how I talked about how your bias can depend on what you're seeing on the market, like sorry, losing my train of thought. Not losing my train of thought, I'm just trying to find the correct word. intraday and overall. So you have day trading and you have swing trading. I talked about that a lot. I'm gonna make a separate video of that later on because I think that's something that's super important that should be talked about more often. Like, like different the different levels of bias basically. That's how I'm gonna word it, and it just makes it sound easier. The different levels of bias. So you have like high time frame confluence, and that's gonna be, you know, your low time frame can go against your high time frame confluence at any time. So that's why you want to mark out your sessions and see what's going on to see if your low time frame is also playing into your high time frame, if that makes sense. And you can also look at news because news really does affect your high time frame and your low time frame when they're trying to connect. It could totally be opposite. You could have a bearish bias, right? But on the intraday you're bullish, if that makes sense. But overall we're bearish. So I just took the bearish trade. And that was my bias, was bearish, because we were chasing highs so we can push into other lows, if that makes sense. That's how I determined my bias for the day, for my intraday. So after we tapped into this order block, well, first of all, let's get into the sessions before we even talk about that. So I marked out my sessions. We had a high right here. We had a low right there. I marked this low out for a take profit. This session didn't really have like a low that I should keep track of since we were already near it. But I still kept in mind that before the beginning of this session, before the beginning of New York session, we swept this 5-minute low and then made our way up to the high time frame order block in New York session, the start of New York session. We made a big push up into the high time frame order block. So after that happened, I started really looking for take profits since I'm seeing a potential trade. So I marked out this session's low. What is this? London session's low. Not Asian session's low. So I marked out Asian sessions. Oh my god. Alright. Retrain my thought. I marked out Asian sessions low. And then I marked out other prominent lows I saw. And I saw these mainly on the 15-minute. But we had this nice area of liquidity right here. And I also, if you guys don't remember, which you should because we just talked about this, is this low. I use this low. Sorry, not this low. Yeah, I use that low as a take profit because we already swept that low, which means we have a good chance of pushing back into this again. So after we swept that low, we have a bunch of accumulated orders right here, or liquidity just lying here that needs to be targeted. So after we pushed into that order block, I was in the 5-minute time frame. I made 4% today, by the way, 4% trade. But after we tapped into that order block, I was looking for a break of structure on the 5-minute, since this was a high time frame trade, and I also didn't need to tap into the 1-minute since I already saw a break of structure on the 5-minute. So I saw first a break of structure right here, but I didn't think it was high enough confluence for me. I wasn't too sure about it, especially with my market experience. Every time I've seen something like that, I usually get a big push back up and get stopped out straight away. Sorry, my cat is rummaging through everything in my room right now. I have 2 of them. They're wrestling now. Oh wow, they're going at it. I have to turn my camera on and show y'all one of these videos. Alright, we're losing track. But yeah, so after we broke structure, after we swept this low, we tapped into an order block, we broke structure on the 5-minute right here. Right here, we broke structure on the 5-minute. And usually after every time you break structure, you have a big push up. And this is where it gets to emotional traders. If you're an emotional trader and you have a big push up after a break of structure, bro, you're going to get out of the trade and you're going to leave money on the table, or you're going to lose money that was supposed to be made. So remember, keep your emotions intact. That's a tip. That is a tip right there. Keep your emotions intact. But we had a big push up. I don't know how much of that is our stop loss right there. I don't know how many pips that is. But we hit about 50% of our drawdown right there. And I had my stop loss 32 pips, but I had it 34 technically because it was about like 4 pips above that or whatever. 4 pips above this high or where we tapped into the order block, so I didn't get stopped out. So after that, I had my take profits marked out and we hit them pretty easily. And today was high impact news, but if I remember correctly, I didn't see any for GU, so I just traded today. But yeah, that's it for trader recap today. Made about 4%. So yeah, 4% of 10K. Pretty good return for one day. At the end of the week too. At the end of week, 400 made at the end of the week. Keep that in mind. If you stay locked in, you can make someone's monthly payment in 2 weeks, bro. It just depends how much you want to lock in, bro. But again, it's not about the money, it's about the skill. So, yeah, all my areas of take profits got hit, and this low right here, this swept low, we hit that again, and we actually pushed straight through it, and I'm pretty sure we're just going to sweep it again and probably just accumulate orders to push back up into this humongous imbalance now. But that's about it for today. I guess we can make some predictions for next week. Let's start on the weekly. I guess we can get started on the weekly recap today too. Why not? Let's do a weekly recap as a trade recap too. So we hit this low this week, and it looks like we're just sweeping this prominent weekly low. And I don't know if we hit an imbalance or not, but we can check right now. I'm at equilibrium. Okay, so we're below equilibrium, which means after this low, we're probably going to push back up into this high, or even potentially this high. I'm going to have this high marked out. But I want to see us push for bigger highs since we're distributing liquidity right now. And from what I see, I do remember this. So we targeted this right here. Where's my paintbrush? I don't need my paintbrush. This right here. This little high right here. We targeted that on the weekly time frame. But we're still going to push up. I believe we're still going to push up probably into this high. And yeah, that's what I believe. I think we're going to have I think our next couple weeks are going to be bullish. And I think we should get ready for that. Although we have had quite a bearish run, but I do think we're done distributing liquidity and we're ready to push back up. But that's what I believe is going to happen. I believe we're getting ready for a good bullish run, and we're going to be targeting a nice prominent high. Or this is our prominent high in case here. I'm going to set it to this since this is the bullish candlestick. But that's it that happened today. I mean, there's really not much that happened this week either, if I'm going to be completely honest. I mean, we swept the low, we swept the prominent weekly low, and we pushed up into a 4-hour high and swept that. That was all that happened for the week. I mean, right here, we push into an order block so we can push into this high. You guys can go to my recent videos for that, because that's my weekly recap, basically, is my recent videos. But I'm trying to become more organized with how I do them. It's just kind of hard. But I also want to like, instead of being so like professional with y'all and like just robotic, I'm gonna kind of I'm gonna chill out with y'all and like, cause I'm a human too, you know. I kind of feel like sharing my personality and showing y'all who I am and all that shit. But I can't let that peek into my trading, obviously, or that'll hinder my trading. And no one should let their emotions peek into their trading. It's gonna hinder you badly. And if you're trying to get this done quick, I don't know what your life is like, but if you're trying to get this done quick, man, don't do that. Do not get tied into your emotions. But that's all that happened for GU, really. GU is really easy to read when it comes to using your tools. If you can use your tools properly, bro, you can read GU just fine. And I'm gonna get more about into using the tools later on, like for smart money, and everyone uses like smart money concepts differently. So like I don't know if y'all know where smart money concepts originated from, but from ICT. I'm pretty sure every retail and day trader, just day trader in general, knows who ICT is. And his his strategy mainly applies to forex. So I really took what I knew from ICT, and let me give another props to TJR. I'll put them both in the description. Y'all probably already know who these people are though. And big props to TJR though. He really simplified it for me and made it much easier for me to understand. But one thing I did realize is I didn't like totally copying someone else's strategy. So I kind of put my own way in smart money concepts and like my own strategy. So like I'll be explaining that more later on. Like when it comes to I just want to gain a bigger audience so I can show all of y'all really what my strategy is and how I use my tools. Because how you use your tools really determines what trades you take and the opportunities you have. Like ICT could have a bullish week, bro. This he could have took bullish trades all week on GU where I took a mixture. You know, there's always something different in what someone else sees. You know, like someone could see right here, bro. Like right here, they probably took a buy right here instead of taking this big sell. So it's always something different, you know. That's why smart money concepts is very useful. You always have an opportunity no matter where you look. It's just depending on your strategy and your plan, you know. Like your plan really determines the type of opportunities you see and the trades you take. If you don't have a plan, then you're not going to become profitable. If you have a plan and a strategy, you're going to become profitable because that's what you see, you know? Trade what you see, not what you think. That's going to be the quote for today. Trade what you see, not what you think. And don't take it too far. Don't take that no, take it literally, but don't take it to an extra mile. Like just trade what you see, bro, based off your tools and based off of your knowledge. Trade what you see and improve as you go on. Because if you just keep on second guessing yourself or like hesitating, overthinking it, you're always going to be wrong because you're not going with your gut instinct and trying to improve naturally. You're trying to force something. So just remember, have a strategy, stick with it, and trade what you see, not what you think. That's going to be the lesson for today. Trade what you see, not what you think. Actually, that's the lesson for the week. I'm going to put that in big words on the screen right now. Trade what you see, not what you think. So keep that in mind. And this was basically a weekly recap, I guess. I mean, nothing really much happened this week on GU. If we're only keeping up on one pair, there isn't going to be much to talk about since, it's just one pair. But I guess I'll get into talking more about other pairs probably in the next couple weeks, but I'm not going to be trading them. I'll talk about them though, so I can warm myself up to them for next year, for the beginning of next year, which I hope everyone is ready for, since we're coming into, I think, September. After this month, I think we're coming into the last quarter, financial quarter, I think, right? I don't know. But I hope you guys enjoyed that. I hope you guys learned something today. I hope you guys agree with what I saw. And if you don't, tell me what you saw. Tell me what you noticed on GU today and what trades you took today on any chart. I'd be welcome to go look at it and tell you what I think about it. Or I'll make a video on it too. I can always make a video on it. I'll do YouTube shorts. I'll start uploading little shorts. I'll start uploading little TikToks. But thank you guys for tuning in today. And I'll be back with another video tomorrow. I'm going to be on the grind for a little bit. Probably not uploading every day, but every other day, basically. And every day. I'll try every day, but if not every other day. And I'm going to mix it between psychology, and right now I'm going to start teaching you the tools, since I've done about 8 videos or 6 videos on recaps and psychology. I think I need to start getting into the tools I use, and I'm going to start it off with liquidity. Nah, I'm going to start it off with breakup structure first, and then I'll get into liquidity. And I can get into how we can base a strategy off of liquidity, but that'll be later on this weekend. I'll get that out for you guys this weekend. How about that? Sounds fair. But I, sorry, I'm stalling. I'm really stalling. I'll see y'all in the next one though, and hope y'all had a positive week. And I hope y'all had good returns. And if you didn't, bro, improve, and you'll have better returns next week, bro. Remember, it's month to month. It's not day to day, bro. Keep track month to month. What's your percent for this month? What was your percentage gain for this month? What was your percentage loss of that month? You know, it's all about the tiny improvements that lead to the big overall changes and end up to becoming profitable. That's what matters. All right. Last time saying goodbye. Trade what you see, not what you think. I'll see y'all on the next one. Peace.